Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Hey everyone, checking in on the market here, SPY IWM and QQQ. So the bulls saw some nice follow through. They saw increased volume. They saw further upside. There are upper wicks of profit taking 2 days in a row, and we certainly don't expect the bulls to make a full recovery here without consolidating. So what we're going to likely see is a tightening pattern. I thought we might see the high be the high of the dump day, but we certainly broke that level. So our resistance is 239.08 and our support is the low here of 235.43. And the range is likely to bounce around, tightening in here a bit, and then we're either going to see a bull move back to the all-time high to fill the rest of this gap, and that gap fills at 239.63, or we're going to see the bears take back over and head back down here to 235.43. So it has been solid volume, enough volume that not really sure which direction we're going to go, but if it were decreasing volume or less significant, then we would be a lot more likely to just see a short-term bounce and then continuation to the downside. And again, it's really just dictating by the tech sector. The tech sector has been very strong on this recovery, and it was the tech sector dumping that led to this significant pullback. So it all depends, is the tech sector going to confirm its bearish reversal candlestick on the weekly from this most recent week and see another red week this coming week? So here on SPY on the weekly, it's a pullback here that's going on, but the lower wick shows the bulls buying the dip, forming a higher low, remaining fully intact of this uptrend. Middle Bollinger Band support on the weekly time frame has been support since the election, and that's going to continue ascending. It will be just under 234 to start this next week. So bulls want to hold that low of 235.43 and be looking back at that all-time high. IWM also seeing a very similar bounce, but a bit weaker in the sense that we did not break the high of the dump day. Same upper wicks of profit taking, rejecting from exponential resistance on this bounce. Resistance of the high of the dump day is 137.04, and support is the low, 134.23. Weekly time frame has now pulled back a bit more significantly. We know 132.40 is an absolute must-hold level for the bulls, and they formed a higher low compared to that level, 134.23. So remaining in control, a bit of a lower wick on that candlestick, and the bulls need this to be the higher low to be heading back towards higher highs on the daily time frame or on the weekly time frame. But in order to do that, we're going to have to see higher lows and higher highs, eventually breaking 139.48, because you can see we're at a lower high, lower low pattern in IWM the last month. So we're going to have to see that turn around before we risk breaking these lows from March and April. QQQ is still extremely strong, but again, upper wick there as well. So there was definitely profit taking going on into the weekend in all three of these markets here. And this is a bearish candlestick, not really giving us convincing confirmation of the bullish candlestick the day before. So potentially the lower high has been set here on QQQ. We can see the high of the dump day was not breached here as well. So SPY was the only name of the three that was able to get over that resistance. And support, 135.87. Resistance, 138.42, 138.77. So Monday will be very telling. The way these upper candlesticks look on the daily time frame indicate that consolidation is coming on Monday. And if we don't see consolidation, if we see the bulls continue strong, then that would certainly stand out. Another thing to keep in mind is oil bounced about 5% in the 2 days here that the market was recovering. So there was an oil bounce absolutely helping out with the bounce that did end up playing out. And if we do see oil consolidate to start the week, we will be looking for consolidation in the markets as well. Bearish reversal candlestick on QQQ. It's the first red candlestick that we've seen in 5 weeks, or in a month, I should say. And if we see another red week, we will potentially lose these exponential supports and look to confirm that bearish reversal candlestick. So that's what we got heading into this coming week, anticipating a bit of consolidation on Monday. We'll see if that ends up playing out. I appreciate you watching, and we'll see you then.